Good morning, everybody. This is Mark, and we're here for T3 Live. So this morning, the last few days have been very challenging from a trading point of view. You have lots of whipsaw action. I think we're in store for that for a little while. We've been calling that this market seems to be getting a little heavy for probably about the last 2 to 3 weeks. Obviously, over the last week and a half, that downside has accelerated. We're now about 6-7 days we've gapped down. This is the first day we're actually gapping up. We'll have to see if it holds. The key is we're getting a little bit more volatile. The VIX closed above 20. I think it's actually going to be below 20 this morning. But overall, there's no A+. I don't see a whole lot of A+ long trades. Actually, at the same time, stocks that have already moved down 2 to 4%, I'm not interested in really, hitting new lows. I'm going to let them rally a little bit at this point in time. Very little leadership. I'm not bearish in the sense that, I'm bearish Mac, for the next few weeks, but overall, I think there's opportunities on the long and short side, and the key is the ebbs and flows of the tape. Understand where support is, understand where resistance is. So this morning, Apple's been pretty much a non-event in the trading trend-wise, but it's been still, giving yourself a 7 to 10 point travel range, 565, 575. Looks like this morning it's up $5. If it can hold above 575, it probably is moving to 585, 580 to 585 on the short term. Banks, not seeing anything there. I'm actually seeing a lot more weakness than strength. Every rally, I think, at this point in time can be a little bit shortable. Look for Goldman Sachs trying to recover its 200-day. That's probably an opportunity for against 110-ish, maybe an opportunity to get some shorts. One industry and sector that is holding up is the home builders. They've actually made new highs as of yesterday when the market really is going nowhere. So again, relative strength, that's a sector that you have to watch. That would be Toll, Ryland, Len, MTH, one of the big boys, NVR, not for everybody, but XHB is the ETF, so something to sort of keep your eye on. Commodities, not much there. So this morning, at this point, Priceline came out with earnings, great earnings. Everything was good, but it's down a little bit. That's sort of the sell the news at this point in time. That's been happening almost every time. That a stock has already run up tremendously. So I'll have to wait and see how it trades this morning. But overall, I'm not that excited about this tape. And the one thing I'm trying to preach to my traders, and I'll just tell it to you guys, is at this point, cash flow is fine. You don't have to be cast a wide net. You don't have to be in every stock in every position because we're getting a little bit more volatile. The key is to hone in on a few different plays, individual ideas, and make some cash flow. Take your trades, take them off the table, and revisit them in a little while. I think that's where we're at in this tape, understanding May, June, July. We can get a little bit more downside action, and certainly, excuse me, the volatility should be picking up a little bit. So keep a good perspective on this market. This is the first 2 weeks, 3 weeks of downside after 4.5 months of upside. It could last a little longer, and certainly a lot more basing in stocks have to happen before we're going to resume any sort of massive uptrend. Good luck today, guys.